Well, thank you for staying tuned. The Nigerian economy has no doubt continued to show positive growth following the country's exit from recession and its resilience in the face of threats posed by COVID-19 pandemic. The consistent improvement in the contribution of the non-oil sector to gross domestic product GDP shows that the country recorded remarkable progress in its efforts to reduce over-dependence on oil, whose future can no longer be assured amidst the global move towards renewable energy sources. According to the latest GDP report for the fourth quarter of 2021, the economy grew by 3.98% in 2021, the highest since 2014, as the expansion in the economic activities was largely driven by the non-oil sector, with sectors such as agriculture, transport and logistics, aviation, manufacturing and RCT contributing significantly to the nation's economic outputs. Analysts are of the view that such key drivers of the economy should be strengthened to ensure better performance in Q1 2022. Well, I introduced him earlier. He's joining me via Zoom to analyze the strategic sectorial performances of the 2021 GDP figures. That's for Q4. He's an associate research analyst at United Capital PLC, Mr. Ebitoye Ate. Mr. Ate, good afternoon. It's good to have you on the show.
Good afternoon, Tolu. How are you doing?
Very well. Now, recently, the NBS released that's the 2020-2021 GDP report. We noticed that despite higher oil prices, of course, we've seen that almost $100 at the moment, the oil GDP still contracted by 8.3% year on year, whilst the broader economy grew by 3.4%. What do you think is responsible for this?
Okay, hi, Tolu. So essentially, whilst the rest of the non-oil industry was actually growing, the oil sector actually stumbled in 2020 and 2021 accordingly. The main reason for this is essentially the fact that oil refinery, how much we're actually drilling was actually less. So essentially, that obviously affected the output of the oil and gas sector. If you're looking at the upstream sector, essentially, so oil refinery is actually lower than previous years. One of the main reasons for this is actually the fact that as the previous guest was talking about OPEC, there's actually an OPEC quota. So essentially, even if the prices were high, OPEC decided to keep production levels at a certain point. So we actually restrained to how much we could produce even if prices were high. And that's actually one thing. The second thing is actually in the medium term, Nigeria has been seeing a lot of kind of reduced capex investments in the oil and gas sector. Look at the last FDI report in about Q3 last year. We only had less than $20 million coming to the oil and gas sector, upstream and downstream. So essentially, that's actually going to affect GDP growth, even though prices are high. But there's actually reduced investment because of the high cost of production and also the kind of uncertain investment environment for the oil and gas sector.
And that's where we now look at the potential impact of the Petroleum Industry Act on the oil and gas industry. What do you think is the impact?
Okay, so as we said before, I've been on this show and I've said it's actually a welcome development. The situation now with it is that did it come too late? Even though we still expect it to have a potential impact in terms of the NNPC limited and the way it has unbundled a lot of kind of segments in the oil and gas sector in terms of administration. We're looking at investments now. We're still looking at more government initiatives to reduce the cost of drilling, because that's actually the main thing, first of all. The other thing that we have to also take into consideration is that besides the PIA, there's also the situation where there's COP26, essentially. From 2022 now, we're going to see the ECB and 26 other countries stop investing in fossil fuels in Africa. Then World Bank is only choosing to invest in gas. So essentially, we're looking at a lot of PE funding for oil and gas projects. So essentially, the pool to which we get money from that industry has actually reduced going into 2022. But the PIA actually does help. But essentially, it brings us to a more competitive level in terms of taxes and in terms of regulation. But again, there's the situation that the effect might have been reduced if competitive was passed about 10 years ago. Essentially, we still welcome investment. We still welcome development.
Let me follow up quickly. What about the 18 months delay that we've had with regards to subsidy and all of that? How would you also react to this? Some say this might make investors see that there's no clarity in this space. What do I do? Do you think it could affect investors' confidence one way or the other?
It definitely does, especially looking at the downstream sector. So the downstream sector, when the bill was passed, we spoke to a couple players there, and they were optimistic, but again, everyone was guided because of essentially what we're looking at was in any policy backflip, because we know how sensitive the downstream sector actually is to Nigerians, especially in the cycle that we currently are in. So essentially, yes, we believe that investors could be deterred with recent policy backflip that we've seen in terms of price liberalization, and that will definitely affect investments coming into the downstream sector. So that actually affects our outlook for the downstream sector and the downstream sector firms that we actually cover going into 2022, in terms of the fact that their margins are actually still relatively reduced compared to the wholesaler privileges that the PIA was going to bring about.
All right, then let's now look at the outlook for the sector as we move on in 2022. My earlier guest was talking about increasing production. He said we could do as much as 4 to 5 million barrels per day. We could even leave OPEC and just run the market on our own. You know, what's your outlook for the oil and gas industry?
Okay, so our outlook is divided into two. In the short term, we don't have the capacity for 5 million barrels per day.
Of course.
Looking forward, essentially, I know the NNPC is looking about 4 in about 2026. But essentially, our outlook for the upstream sector is actually better than what it was in previous years, because prices are so high. Even higher cost producers can actually come into the market and drill more now. So essentially, our outlook is higher, even though there's still some downside risk. We've seen some reports of vandalism in the past couple months, the last 2 months. So the upstream sector is relatively moderate for our outlook, but the downstream sector, we are actually is a bit downcast because of essentially price liberalization, which would have made them let the operators in that market essentially improve margins. If there was seen a delay in the new price reform, so essentially we're still going to be seeing them kind of earn smaller margins. So our outlook for the downstream sector is not bright, but for upstream is relatively moderate because of the very high prices, and we don't see these tensions globally actually stopping anytime soon. So essentially that's actually going to support upstream drilling, even for high cost producers.
Yes, moving on quickly, what also were the drivers that pushed the telecom and ICT sector in 2021? Before now, many said because of COVID-19, a lot of people taking advantage. Of course, the ICT space, that's how you can connect. And that's what we're even doing right now, having you join us via Zoom.
Yes.
What do you think has pushed this sector in 2021?
Okay, so yes, definitely COVID was a big factor, but again, even before COVID, the sector was already a high-growing, fast-growing sector. We've seen a lot of investments coming into that sector from abroad, in terms of a lot of new startups and a lot of disruption coming to that sector. That's obviously helping growth. That's one thing that we noticed. So essentially, the shift in lifestyle and the shift in shift in balance essentially has seen growth. But also, Nigeria is actually a high growth region or high growth country. For the ICT sector, you have to look at a couple of demographics that support that. The first thing is our population. Most of our population are under 30, and they are very ICT friendly. That's the first thing. Another thing, if you want to look at, if you want to take away telecoms from ICT sector, which is what we should do, even though the growth actually slowed from 15% to 14%, a lot of that rapid growth was due to COVID. So 7% essentially is more of a stable situation. So the first thing that you have to notice is, obviously, you look at the kind of income lines for a telecom firm. The first thing is voice revenue, data revenue, and mobile money revenue. So essentially, all those services kind of are very attractive to our market in terms of the fact that we still have lower financial inclusion than other regions, lower mobile penetration, and then we also have a very data-hungry population. So essentially, all those factors are there to support that sector and players in that sector. in the telecom space.
Great stuff. Let me take you, before we wrap up this interview, let me take you a little back to the oil and gas sector. But anyway, the oil and gas and the non-oil space. It's a two-in-one question. The non-oil sector also performed significantly well with what we've seen. Would you say that all of the efforts being put by government is now paying off this time? Talking about the Nigerian Export Promotion Commission Council, we know all that has been happening with regards to improving exports. Would you say that has also helped us in one way or the other? Then the other side is when we talk about crude oil, the positives in it, remember that we don't refine. It's worrisome. I always like to ask that question. It's a negative impact. Even with the high price of crude, we are still paying more for PMS.
Okay. So the first thing, definitely the non-oil sector was obviously the main driver, and obviously the main reason was, first of all, you have to factor in the low base effect from 2020. So obviously that's actually one of the main factors. But there's definitely been some government stimulus in terms of the lot of government incentives in the agricultural sector. And the manufacturing sector also kind of rebounded due to low base effect trade as well. But again, so some sectors were more or less due to low base effect, and some were due to essentially some extra the interest sectors for the government. When you look at healthcare, when you look at agriculture, so essentially, and trade as well. So obviously those sectors were boosted by government incentives. And then your second question was kind of oil refinery. So earlier when I said refinery, I meant drilling. So when we're oil refinery, actually that's the final product now. And we believe that there are some certain so coming into, obviously, again, if you look at the NMPC remittances report, you see that in some months they actually remit, they actually pay more for PMS subsidies, even if it swaps, than they actually do remit to the CBN. So when you're looking at that, that's obviously a big hole in definitely our fiscal balance, and obviously concerning balance. So obviously looking forward, essentially by the time we see these new refineries reported to come on in Q3 2022 come on, we expect to see improved government finances when it comes to remittances from the NMPC. So we're actually looking forward to that, and we're seeing how that will actually affect the markets.
Lastly, what is United Capital's outlook for the RCT sector as we move on in 2022?
Yeah, so we actually do remain bullish. You can check our website for our buy recommendations for some of our from ICT sector stocks that we cover, but we're actually very bullish, and the fundamentals of the market, as we said, the population, the demographics, all those factors, and the increased investment in the sector actually support that sector in terms of we're very bullish on the sector.
So would you say that we can say all authoritatively that we are done with the effects of COVID and all of that, and it's now business as usual, so we should expect growth across sectors?
I mean, so we're not done with COVID. Even last year, we were not done with COVID, and we still grew about 3%. So essentially, there's still new waves and new variants. So we advise everyone to kind of get their vaccination. So because going forward, we believe that the effects have been moderated essentially, and we're back to business-ish. But there's still some downside risks that we could see going into 2022.
Let me tell you just one more before you go. You're a research analyst. What are you thinking about investors looking at our country in 2022? It's a pre-election year. We expect a lot of spending, and some investors might want to sit on the fence, thinking that they don't know what might happen as we move. Do you think this would affect investors' confidence, or you think that investment will still come to Africa's most populous nation?
Also, it actually depends on. So we believe that FPI flows could still improve. But although we kind of expect we expect limited flows coming into the country in 2022 because of the increased because of the monetary policy normalization abroad. So essentially, we're seeing kind of developed central banks hike rates, or we expect them to hike rates in 2022. So that's actually one of the reasons. So that's more of an external factor than an internal factor. But we believe that factor kind of outweighs the monetary policy in Nigeria, essentially. So we believe that the external factors outweigh the internal factors if you're looking at kind of investment in the country.
All right, there, associate research analyst, United Capital PLC, Mr. Bitoyate, has there been with me talking about issues around the GDP, sectoral performance of specific sectors. Thank you so much, and do enjoy the rest of your day.
Thank you. Thanks for having me.
Oh.